All right, hey traders, it is Sunday afternoon. It is a hot Sunday afternoon, and this is your weekend video where I'm going to go over a lot of things. I'm going to go over obviously what we're seeing in the price action, what we saw towards the end of last week, Friday specifically, and I'm going to talk about kind of the checklist that I've been showing for the last couple weeks. Is it time to hedge? What is sentiment showing us right now? A couple other factors, put call ratio, is that showing us anything? And then just my general theme, which I think is the first line up here, that it's earnings season. So I'll get to that. We'll also go over my watch list for the week. I could tell you that the watch list just right off the bat is going to be a little bit slimmer this week. Couple things for the reason for being for that, and then we'll go over open positions as well, and just further what I talked about in the midday session, which was just kind of what I was feeling going into the weekend and where we are right now. All right, so a lot to cover. I'll try to talk a little bit quick because I don't want it to be a super long video, but a couple things to review from last week. If you didn't see last week's chart forum, that had web on it. I thought that was, for viewing, I think that's really good to kind of go back and look. We talked a lot of very objective chart form webinar that we gave. You can listen to maybe the first 45 minutes where we're talking about some things like gold, silver, the overall indices. We talked a lot about the Fed and stuff, so we really got into it regarding some of those factors and how the market is reacting. So if you haven't had a chance, go ahead and review that. Also, you could review Friday's midday video where I went over, really kind of in the middle, right before we started to see things sell off. I kind of gave my perspective on, what the price action was telling us that far for the day and what I was looking to do in terms of positions. All right, so that's just a quick review for some of the things that happened last week. Let's go on to this week. All right, so it is Sunday. It's 7/21. Yeah, it's earnings season, right? So this is what we've been talking about for the last couple weeks. I'm going to repeat myself here, but I see a lot of people on Twitter talking about how they're not seeing a lot of setups. To me, this is kind of it's a little bit obvious, right? I don't think during earnings season you're going to see a ton of great looking setups. I think the price action, from my experience on earnings season, now it's not always 100%. Nothing is always 100% of the time. But during earnings season, we see a lot of chop. It could be a really difficult time to hold positions for short to medium term swings. Long term swings, it is what it is. We're still in an uptrend. I'm going to go over that in the charts. But for short and midterm swing, it is very difficult to manage swings. You really have to be nimble and quick to take profits and not get greedy. But I have here this second sentence is, it's a great time to position lighter than expected, observe, and then react to buying opportunities. I'll talk a little bit about that too, where some of the things, some of the names that reported last week gave a buying opportunity in other names. So there's 2 or 3 examples I'll provide regarding that. So I want to just go through the checklist for when it is to hedge. Let me talk about a couple things first in here before I get to the technicals in the S&P and the averages. But I'll kind of hit some of these not in the exact order. But the fear and greed index. Well, I thought this was pretty interesting. I have the F cut off here, it looks like. So it's just the ear and greed index. But this hit at one point last week, like a 64 it was showing. And I think when we went over this maybe in last week's video, we were talking about how fear and greed was ticking up to greed, not extreme greed, but it was catching, I think it was right around in here. So it's a 44. I thought that was, it's really interesting how quickly that is sunk below 50, right? So that's not a bad thing. I would rather be putting on positions when the market isn't so exuberant about what's going on. So below 50, and again, I'm surprised that this thing dropped so far, because just a week ago it was 64. So that's, again, that is not a negative. I view that as a positive. This one, however, right, depending on what you're looking at, I've found that this one is very good. Helene Meisler tweets this one out. This is directly from Barron's, but you could go to her feed and you could check out some of the other things that she's been tweeting about, like which we talked about in last week's video, insider sales, which ticked up last week, not so much this week. This week it kind of came in a little bit, but yeah, we're edging closer to euphoria versus panic. This has been really good in terms of buy and sell signals. Remember that we got a little bit ahead of ourselves in April, and we had a whole month of decline, which was in May. So this thing really gave. I'm going to continue to use this and emphasize this because it seems to be a very good indicator. So we are getting. This one is showing different than the fear and greed index. It's actually been ticking up. Maybe it doesn't get to this and maybe it starts to drop in a little bit. I don't know when they take this snapshot, but what it's showing here is that we're getting very close to euphoria. This was also a great sign back in September too of last year. We got to euphoria, and then it was basically just a downward slope here. Not only in this index, but in price, right? Until we got to the end of December, and we know that story. But yeah, I think it is notable that how much this has ticked up from where we got in May, right? And it seems like it's showing what the market is showing right now, that we're kind of gotten to a point where we're stalling out a little bit. All right, so that's that. Credit spreads. Is there anything that's showing us really danger in credit? Remember, the bond market, things usually flash a warning signal. I think it's a leading indicator when that happens. Not really. And again, why I'm using IEI versus TLT. Someone in fixed income, and I think this is a great point, told me to make sure that I'm matching duration. So I did make sure that I put this in here. The modified duration for HYG is only 3.2. So I don't think using TLT, which is like, I think around a 20 duration that I'm going from memory, but it's certainly much higher than HYG. If you want to look at TLT, I would do it with IGBLB. This is long-term high yield, and you can see here there's nothing really showing any warning signal, but I would keep an eye on it. If something does tick up there, then I would say, hey, we've got something's going on there. Put call ratio, not showing any extremes here, other than I think we hit pretty low back on 710. It got to be, I would call this exuberant too, when everybody was buying calls. So that kind of settled in, but we're kind of right around the midline. So I'm not really showing any cause for concern in the put call ratio, positive or negative, right? It's just kind of right now in that. So that's kind of the majority of the sentiment indicators. Besides the market sentiment from Citi's model, that I think is showing, that we're getting to the side of euphoria. So that I think is most notable out of all these. So let's move on, right? So being that we don't have any great conclusions to draw from that, let's talk about price, right? So I've got some of those sentiment indicators in here. So what did we see on, and we'll talk about which ones I'll tick off which ones are showing a little bit of concern here. But let's jump into the S&P chart. So one of the things that I see, and we're going to see this, and if you probably opened up Twitter and saw some people tweeting, you're going to hear a lot about bearish engulfing price, which let me back up. The price action on Friday in candlestick charting showed what's known as a bearish engulfing candle. What does that mean? It means that the price action took essentially swallowed or engulfed all of the price action from the previous day. That is normally a bearish indicator when you see that happen. And again, that's just one day. But and it just barely did it there in S&P. Even this is debatable, I guess, with this line here. It's so small, right? But if you zoom in, you could see that this did engulf, right? So does this mean death and destruction? No. It just means that, it's a sign. It's a little bit of a sign that that the bears had more control. This one looked like a kind of crazy looking candle for the Qs, but same thing there. And IWM, which continues to not participate on really either side. This was also bearish engulfing as well. So let's go back to the S&P. So yeah, so that's one day. It could hint at some more negativity to come. That's basically what it means to me, is that the market tried to push higher. It could not do it, and the selling pressure increased, right? And that's something that we've been talking about. It's why I post that. It's one of the reasons why I post that spreadsheet where I've got percentage change from open to close rather than the overall percentage for the day. It kind of just tells you who's in charge for the day. It also gives you a hint at where buyers are coming into what groups and so forth. So a lot of analysis in there, but I think that helps me just to kind of show me what is really going on underneath the hood in the market, right? So we've got bearish engulfing. What about the top of value? So here I think is important. We're not in value yet. While it looks like we're leaning that way, and we did this here as well. But we're checking back, right? So the main thing here that I see is, upswing, check back. This was the month, the month of June where we checked back. Right, here was May, obviously. All of May, we checked back. We broke higher in June. So not the whole month of June, just the last week in June, we checked back here to support. We've been trending higher up until about 7:15, and then we had a little bit of a distribution week, right? And so this is top of value. So really 29.64 is going to be the level to watch. So if we go to this, right, we don't have this, right? We're not in the value area, or we're not. So first of all, we're not below value, but we're not even in the value area yet. So you could check that off. That did not classify. What about the S&P or SPX falling below the 20-day moving average? Just barely, right? And I think that's so really where this gets into be a little bit more danger. And again, notice we're coming from a very overbought area. The S&P did hit 70 RSI, which I think for when a major index hits over 70, it's kind of a place to take profits. Usually the indices, unless something really odd is going on, they don't get much more overbought, or they don't get too much further above 70 on the relative strength index. So notice that this coincides perfectly. We hit 70. The 5-period was the distance between the 5-period exponential moving average was way above the 20. So that has closed, right? So now let's see if this holds, right? I don't really have any, there's nothing that's going to tell me right now to say that we're going to go much lower unless we break into value for the month of July. That's going to be 29.64. Am I leaning that direction? A little bit. I mean, considering that bearish engulfing bar on Friday, I would say it's a decent possibility that we can move further. So the possibilities that we could fall into, right? And I gave this on, was it Wednesday or Thursday? I said that we had three possibilities, and I was leaning towards downside. When I went over the three possibilities for earnings season, I said, hey, we can continue to grind higher, we could chop, or we could actually come in a little bit. And I was leaning towards that third possibility. And so far I've been right. Right. So now, again, let's be forward looking, right? Let's not just say what happened back here, but let's think about what could happen for this week. We could have some follow through from this candle. We could start the week, futures could open up lower, and we could get a bar that breaks into value, and then we get buyers coming back in and to push us higher. So that's one possibility. The second possibility is we continue to drift lower and explore some areas into the value area, or we have an inside day and we continue to chop. And I guess you could do number 4 from there, is that we move higher. So that's a lot, right? I mean, so out of those, what am I favoring? I would say the fact that I would think that we would have some follow through from Friday's price action and maybe drift into value, and then possibly buyers come back in and support the market. That's what I'm leaning towards. So if I think that there's going to be a little bit more that we could have some follow through from Friday, I tried to really um, practice what I preach, and I took off a lot of short-term exposure on Friday, right? I didn't like how things were going with some of my positions, and I'll talk about some of those. But some positions that I just recently got into, I made sure that I took a couple targets and those, and even forced some targets, and just reduced my exposure a little bit. Just to kind of, especially in those short-term option positions, right? Because those are going to be your most volatile positions, right? So again, so that's what I'm favoring, is that maybe we touch inside value either 1 day or 2 days, and then buyers come back into this market. That's what I'm favoring, but I'll be prepared for all of those scenarios. Bottom line, I'm going to be positioned a little bit lighter for earnings season because we just don't know what we're going to get. We've got a lot of names that are reporting this week, so I'll touch upon that in a second. I just wanted to finish the analysis, but those are some of my thoughts going into this week. So we got this one, check. Price below, just barely falls below the 20-day moving average. We do not have a crossover in the moving averages yet. We actually have them coming down a little bit, which could result in a buy signal. It's just too early, right? So a lot of these things, it's a little bit too early after, a day like we had on Friday where it was bearish engulfing. Again, which is usually a negative thing. So let's go through. So we've got one thing so far. Breath shows us a negative bearish divergence. The advanced decline line breaks below while the S&P is not. I did not go over that one, but I certainly can. So there's two different ones that I look at. This is the advanced decline line for NYSE stocks. Yeah, it's coming off the highs a little bit. Is this danger? Is it breaking down? What does this look like to you? Does it look like it's breaking down? To me, no. It just looks like it's coming off the highs a little bit. So we'll see. Again, we'll have to keep an eye on this. This is just kind of a wait and see. But I think it's normal a little bit for this to dip. I've got some short-term moving averages on here, the 50 and the 20. So this is coming in a little bit. How's it look for, this is for NYSE stocks. How's it look for the S&P 500? Not as bad, just coming a little bit off the highs. So I think so far everything that's telling me here is that maybe we're just pausing in the uptrend, not showing anything that's majorly concerning. We talked about credit spreads, small caps. This one I would maybe say has me worried about this one. So this is cause for concern. Again, it's a little bit too early, but if this breaks, maybe this might be setting up for a short. Notice that we are inside value now for this one, and could see a move to 150.61, right? So if you're looking for a short, we're probably, and these crazy prints are going to be a little bit distracting on these. Let me just make sure I've got the right one that I want to show here. So 1 hour. Let's use the 20. Let's use the 20-day. But yeah, it looks like we're going to open up a low value, right? And this looks like it's struggling to me. So 154.04 would be the first level to watch. If we continue below that, I think small caps are a short. Now again, looking at these things completely objectively, and on the daily chart, it's got to get back above 155.27. Right, so that's the main thing. I want to go through the rest of the checklist. Event risk, earnings season. So that's going to be a big thing, right? We got a lot of names reporting this week. I put number 9 in here. Good news baked in. This kind of felt like it with Microsoft. Now Microsoft is just one name. It still finished up on the day, but we went over this in Friday's pre-market session, I talked about some levels to watch in Microsoft. And I said, watch this thing if it sells off really hard. And it did. Unfortunately, it did. Right? I talked about, if I can remember from memory, but I think I said 138.50 and 138. So we gave all that back. So that tells me that the software group probably needs a little bit of more digestion. This is what the software group looks like. I really don't have any software names on my watch list for this week. I would like these to come in a little bit, to come in a little bit further. I said that once, I think, on one of the videos last week, that software could come in, and this was on Wednesday. It gave a nice day, but didn't close on its highs. So yeah, if we come into value, I would be looking at whether or not we hold that support. We'll go back to the S&P, but yeah, I think that some stocks look a little bit tired. The other thing that I see is, and this will confirm itself probably in the first couple of days this week, but we could have a baby Head and Shoulders forming here too. Again, this is really short-term thinking here, but left shoulder, head, right shoulder. We just don't know how this could play out a little bit. Remember, people were talking about this Head and Shoulders back here, and we never got it. So, but it kind of looks like a little bit of a funky Head and Shoulders. Bottom line, 29.64. Instead of rounding up to 29.65, I would use 29.64. That is going to be the level where I remain very lightly positioned for the overall market, right? So 29.64. Let's look at the 1 hours. Notice that we did go through, get the right one up here. We did go through, it's funny because we talked about this on the video, the chart forum webinar with Webb, and Webb and I were looking at this two different ways, and he said, well, that's interesting. We didn't explore what's known as the 80% rule, right? Meaning once price starts the week above value, gets into value, there's an 80% chance that we go all the way through it. Well, we didn't get it here on Wednesday and Thursday, but we got it on Friday. So that was completely satisfied. Most likely we're going to start the week below value. 29.93 is the level that we have to get through to the upside. So that's what the 1 hour picture is showing us. A little bit bearish if we start the week below value. But again, bottom line, really watch that 29.64 level in the S&P. Okay, so that's very easy. And I like quick, simple setups. Qs, if you've got more technology, more momentum stocks on, I would watch, it is what it is, 189.87, although that's not an easy number to remember, but 189.87 will also be the level to watch in the Qs, right? So the Qs, and I know Friday's bar looked a lot different, depending on if you're using futures or not. But SPY, it's funny how similar SPY and the Qs look in terms of chart pattern. But yeah, that's showing SPY, if you want to use SPY, 295.70. And so that's 189.78. All right, so that's the major indices. We could look at Dow as well. Dow's got maybe a little bit more to fall if we get a little bit more volatility. Let's go and let's look through a few other things. Let's look at the VIX. The VIX ticked up a little bit. Let's extend this to the right. So we're going to be, we're butting up against that downtrend line in the VIX. So if this pops above, say, 14.5, and you can see that there is a bullish crossover in the MACD. So again, this is kind of saying that so we're kind of right at the point where we could be seeing a little bit more volatility, and we could, on the VIX is showing us that, and in the S&P we could be falling into value for the month of July. Right, so we're just right at that point. So again, things to noticing that we're kind of right at the edge or right at the point of some things. I think the VIX is showing us that we may have there may be a little bit of more volatility in the beginning of the week, the way things are showing, the way, and in addition, that bearish engulfing bar on Friday, telling us that we may have a little bit more volatility in the beginning of the week. All right, so that's that. So moving on. ETF fund flows. I wanted to show you this because I haven't really been emphasizing these that much. I just really haven't been they haven't been giving me any major signals. I'm not seeing a big rotation into a group of stocks. I'm not seeing that in international. International has been extremely quiet. I'm not seeing any major inflows or outflows, for that matter, into international areas. It's been super quiet in international. Fixed income has been showing, over the last month, I would say weeks ago, it showed big rotation into high yield bonds, but that's tapered off over the last week and a half. I'm not seeing anything major in treasuries. One of the biggest things I'm seeing right now is gold, right? Big move into gold last week, which we know, and I'm going to go there next in the charts, but $914 million. GLD is a very big fund that only increased the fund size by 2.5%, right? So it's always good when you're looking at some of this fund flow data is to recognize what the dollar amount is in terms of percentage of the overall fund. I could tell you, while that GLD inflow is notable, it's only 2.5% of the fund. And if you look at this here, because I could look at this in Bloomberg, you could see just on a 5-year chart that this really is not that big, not that notable. Notice all the inflows here too, when this started to tick up and they were wrong about that, and then we saw outflows thereafter. So I wouldn't say that they're really that predictable, meaning giving a good signal, the flows, even though it is noticeable uptick in buying. Same thing in silver. But I wouldn't say that it's predictive based on the analysis here. Now, this is definitely different if you're looking at this. And again, the sideways base here is pretty notable and interesting within that. So I would say that was probably the most interesting thing. Here's silver as well. Silver was more of a percent of the fund. $234 million went into SLV. That's 4.4% of the fund last week. What else? Why I have these two gray lines? There was some buying in VIX instruments. TVIX and UVXY both saw inflows, not on Friday, actually midweek. But again, pretty decent size in the fund, 18%, 12% of the fund. There was no notable fund flow for VXX, just in the leveraged stuff. You could see VXX, only $6 million. Is that right? It's showing that's an 18% increase in the fund size. I guess it's a pretty small fund size, VXX. All right, but still, I think overall not that big of an inflow. But so all three of those did have inflows. Again, we went through the VIX chart. It does look to me that we could see some volatility the way the charts are reading and the positioning going on. All right, so that's the most notable thing I see in fund flows. Again, not too much in sectors. There was a bit of outflows in the tech space. Tech had 475 million outflows. A lot of these. What were so most of these funds, right? Healthcare, industrials, materials, REITs, technology, all have decent outflows. Consumer discrete. This is. I don't think that's real. That's going to be true. It takes a little bit to kind of read some of these numbers, but this 592 I think is going to reverse. Sometimes these are one-day phenomenons. If volume doesn't, volume needs to support that, and I don't think we saw that. So again, just kind of ignore that number. We go to the 1 year, not to spend too much time here, but see how there's no spike in volume. So this may just reverse, just like it did here and here and here and here. So somebody, I think it's for creating and redeeming to facilitate stock loan activity. So anyway, I don't want to go into that in this video, but I would ignore that inflow for consumer discretionary. Staples had some inflows. That's it. So not a lot of interest going on in U.S. sectors at all last week. All right, so a couple, minutes going through there, but, I didn't see a lot of interest besides a little bit of buying in VIX instruments and precious metals stuff. So how does this look for GLD? I did put on a trade in GLD. That's an inside day there. So I do think that this is going to be partly driven by quantitative easing, right? So we talked about that plenty last week. I'm not going to talk more about how the Fed fund futures were pricing in 40 basis points after Williams spoke, and then they reverted back once a Fed speaker came out and said that was just an academic speech. So regardless of that whole event, Fed fund futures moved back significantly. That's why we saw gold come in. That's why we saw equities come in. Partly the reasons for both of those. So, I don't know if that's going to be the only catalyst to bring gold higher, but it should be something. In any event, just reading the technicals, I thought an inside day would be worthwhile to go long GLD. Where I would be getting out of that is if it breaks into value, right? So if it happens to sit back further and just ends up being chop, I might exit that trade. But I figured to give it a chance. GDX is pretty overbought here. We'll see if it kind of digests a little bit after a nice big couple-day run-up. And if you look at sectors performance-wise, go back into Slack. This is all in the news channel for you, but a big week. So I'm not sure I want to chase 6.7%. I would let this settle in. X and Me also was up 2.8%. Interesting here, semis up 1.9%. I'm going to spend a little bit of time here as well. And then on the other side, and there just really wasn't a lot of other sectors that stood out last week. Energy names got walloped. XOP down 7%, OIH down 6%. We talked a little bit about the energy stocks in the chart form webinar on Thursday night. These just continue to move down. If you're looking for shorts in this area, I would probably wait for a bounce. I think they're probably due for a little bit of a bounce. The one name that I was long, just to kind of rehash this, is CVX. I'll still be watching this name. I'm not in it, but if it does break, sometimes the entry is the wrong timing. So I would keep an eye on this and see if it can go, get out of this range. But overall, this XOP looks really nasty. So it could see a retest. And again, if you're looking for a short, if it retests the bottom of value and fails, then that would be a short signal for this. But I also wouldn't be surprised if we get a little bit bigger of a bounce, considering how beaten down this group is at this point. Kind of brings us to oil. Oil is consolidating also at the top of value. Big nasty down week in crude oil. 54.92 is the level to watch there for your support. Also, look at the weekly chart. This is also pretty revealing, I would say. Right, a break below value, came back and retested the bottom of value and failed. So to me, that's pretty negative looking on the crude chart. All right, so that tells me, other than for looking for a short-term bounce, probably looking for longs in the energy space is not going to be for me. And again, I stick to uptrends. All right, so that, just to review last week's performance, which I wanted to do. Yeah, so I talked about international performers. I try to go through and look for some areas that were showing some strength. And I'll go through a couple of these. Am I going to play any of these names? Probably not. But interesting. So the reason why, if you look at the weekly chart in this United Emirates ETF, that's got to get above 1464. My favorite looking at of all these is the one that I'm in, Frontier Markets. It had an inside week last week, so that's good for continuation. And on the daily chart, looks okay, right? Looks like it's trying to put in a bull flag. Watch the 20-day moving average. I don't want to see price really slip. I've taken some targets in that trade on the option side. I haven't done anything on the stock side. But again, if you look at this long-term picture, it looks pretty good, but it may do some digestion, move up, and do, that's why I'm on this. That's why I'm in stock, and I'm on December calls. And I think I've taken 2 targets in that trade. All right. Another one that I thought was interesting was Belgium. That's moving up a little bit as well. Okay, so let's talk a little bit about, we talked about the S&P technicals, we talked about sentiment, we talked about fund flows. I want to talk about the semiconductors for a minute. So the semiconductors, this kind of got lost in the shuffle last week. And it's tough because international names sometimes get lost a little bit because everybody's noticed, the news sources are basically mostly about domestic or US names. But Taiwan Semi had earnings last week. I don't know if anybody saw this, but it was I would say partly the reason why the semiconductors were so strong. Some of the key takeaways from their conference call was that they projected higher than expected revenue for the third quarter because strength in demand for smartphones and advanced technologies such as 7-nanometer chips. So I believe, I'm not a chip expert, but I believe these are like the smart chips, ones for the 5G stuff. So I thought that was really interesting, not only there, but the smartphones that are showing demand. A little bit contrary to what we've seen with smartphone demand from Apple months and months ago. So perhaps that this is starting to tick up. And I think that's why we're seeing the semiconductors really pick up a bit. So this is Taiwan Semiconductor. It does have an ADR, trying to move through this. But if we look at some charts, so Micron, Michael posted the chart of Micron and why he took a long position in it. Yeah, I mean, since this thing had earnings, this thing has just been on a tear. If you look at the weekly chart, for me, and everybody's got different opinions on this stuff. I would I'm waiting for some digestion. I'm just not going to chase Micron up here, even though this was a really nice move out of here, this little digestion. So 43 to 45. If you look at so I think it looks really good for long term, but if I would be looking for like a check back, you get a check back to 40 bucks or 41 in here, that would get me more interested. I just haven't been trading this name. Western Digital. I think if Western Digital gets above 57.61, and maybe earnings might do that. One of 2 things are going to happen here in Western Digital. It's either going to break into value or it's going to get rejected. You got earnings on 7/29. So I think that's not this week, but next week we get Western Digital earnings. So that should be an interesting one to watch. Let me go through a couple other ones. A couple of these are on my watch lists. Lam Research, right? When is Lam Research report? So again, for every one of these names, you're going to have to say, oh, when is this report? This is 7/31. So we've got, 10 days till Lam Research. But I like how this looks, right? Kind of a little bit of a forgotten semi name. I remember they had good earnings back here, and they kind of fell apart a little bit. But they're putting in, put in a little bit of a lower high here. How does this look on the weekly chart? So, we've got the previous high to deal with at 209. 219 would be the top of value. So that's right around, I think, an 11% move. I like that. But of course, you're going to be running into resistance. So again, this group is showing relative strength. I think that's a pretty decent sign, and we'll see if it follows through. AMD, kind of hitting this previous high and coming in a little bit. Let's go to the daily chart. So again, another name that reports earnings. That's going to be not this week, but next week. But it's funny, and I wanted to talk a little bit about talking about taking profits, right? I mean, this is when CNBC got real bulled up on AMD, the call buying, the call buying, the call buying. Yes, this made for a great day trade, no doubt about it. But look at what it's done since. It has not given much, even though CNBC was touting this thing as, they scrambled into calls. Well, they certainly did, but they were short-term calls. They were weeklies, and they were like another week out. So again, making sure for some of these, like, these pumps that we see on CNBC, half the time they're really good for taking profits that day. And I just wanted to make sure that you're seeing this, because these guys won't ever talk about something that doesn't work out, right? They just talk about when they give victory laps when they work, right? But they pump this thing up so much that day that it's been coming in since, right? And it did hit previous highs. So, why I'm illustrating this point, there's another name that I wanted to talk about too with taking profits, but I really think that by assuring yourself in this market of, taking profits on these strong days, it's a difference between making money right now and losing. And if you're holding for a longer term trend, which there's nothing wrong with that, just make sure you've got the right position on for doing so, right? And you could see my positions right now, right? And I've got many more stock positions on than option positions on. And the option positions that I do have on are not very large positions that I've got on, right? So I do have a handful, but right now I'm just looking for, and I'm still taking targets like this Z profit, right? I mean, this is a big deal, right? I mean, sorry, not Z, but that's another one that had a very ugly looking candle on Friday, but ZS, right? The difference between, I forced a profit target at 85, and this thing's down to 82. It closed at 82.68. So yeah, I mean, looking at this chart, it's a beautiful, nice, moving up, grinding up chart. But you just have to be careful when, what your time frame is and what you're looking at. Because I like how, if you take a target, you could always put that target back once you get the better signal. The signal that things are going to turn back up again. For now, I'm happy with taking that target, and we'll see what this market brings here in the first week, in the beginning of the week. All right, so I wanted to go over, I danced around talking about earnings. Yeah, we've got a huge week, right? So we'll go through UTX. Not a bad looking chart. I try to think about this weekend, and I'll go once I bring up my watch list for the week, but I really try to think about some things a little bit outside the box, right? It's really hot out. So, who's going to do well in these situations? Well, they make Carrier air conditioners. So I would think that this would be positively affected by that. I try to look for some, even like bathing suit stocks, GIII, just, some of these things, they don't look that great, but, I think there's going to be some trends to play out with the hot weather. Home Depot, right? I mean, so again, here's another one where if I didn't take profits and I didn't get greedy, this could have turned into a losing trade on me, right? But this was a really nice winning trade from about a week and a half ago, 2 weeks. And this one I exited perfectly on, Right? I took profits right on the highs in Home Depot, and it's back. It's coming in back to support. So I would think, I'm not a weatherman, that's not my expertise, but I would think with this hot weather, we could see more hurricanes. So I would think of this as a hurricane, partly a hurricane play that I'll be looking to put back on. We don't have to worry about earnings with the stock too. It doesn't report till 8:20, but this will be a name that I'll be kind of top of my list for the week is Home Depot. And again, maybe going out, we caught this one very nicely, but I'll go back into some longer term, not longer term calls, but like medium term, October calls maybe. Something that I can kind of keep on for a little bit longer. Going back, so looking at earnings for the week, right? So I want to kind of stay away from names that are going to be reporting this week. I'm not looking to really put on very many names looking for a run into earnings. Chipotle report, so it really gets heated up with as we get to the middle to the end of the week. JetBlue reports. I do think the airlines do not look bad technically. Chipotle, Visa. Interesting, AXP reported a good quarter, I thought, and they fell too. So, Visa and MasterCard, I think they got to come in a little bit. I love this group, but I think they just have to come. I think you have to be patient. PayPal has not really been behaving that great, even though it did just make a 52-week high about a week ago, or maybe in the beginning of the week. So it's really tough to be judgmental with names that have made 52-week highs recently, but have just been kind of coming in and settling. They report on 7/24, so that's this week as well. And then as we get to the end of the week, again, a lot of names. ServiceNow reports, Las Vegas Sands. You're going to have a little bit of everything this week. And I'm looking for Amazon. I know, here's Amazon. Amazon reports this week. I wanted to go over that chart. Right, so we're seeing a move. This looks like a really nice cup and handle, but it's being faded here a bit. But I would rather have this name fade a little bit into earnings rather than get super overbought, which we've seen that in some quarters, and it usually doesn't go very well. So could be setting up for maybe a short put spread. Now I did that in Netflix, and Netflix got completely beaten up pretty badly. But even though this is grouped in with a group called FANG, Netflix really has nothing to do with Amazon, right, in terms of business model, other than being grouped into a momentum-based, some momentum-based indexes, as well as called the FANG stock. This is just one other point I wanted to make. Even like within the rails, you would think that the rails would be following one another. CSX got smoked on earnings, and look at what KSU did, up 4.6%, and UNP. So going back to the first sentence of the video, observed and then react to buying opportunities. Now, I noticed this stuff. I considered a couple trades. I just really didn't bite on them. But I was thinking of selling put spreads in UNP based on the CSX earnings. And then also Honeywell got hit really hard. Honeywell, though, I don't like how it looks, even though it's in value. But Honeywell sold off hard, and the same type of strategy would have worked. So what I'm trying to get to is I would not be overly worried about one name in a group falling on earnings and possibly seeing the rest of the group going down. I think there's a lot of individual issues going on within companies, and especially ones that do not have the exact same, business lines, right? So hence Amazon and Netflix, completely different companies. And I think that's just what we're going to see for the rest of earnings season. I don't think it's going to be all bad, and I don't think it's going to be definitely not all good either. I think it's really going to be mixed. So if you could get some, if you can find some opportunities where something moves really too far in one direction, there may be a buying opportunity in another name. All right, so that's a lot to talk about. Let me just go through my names that I'm watching for this week. I think we actually covered a lot of them. Somebody asked me about Boeing. This is not a stock for me to trade, but because I think it's too headline driven. But I have to say the technicals do not look bad in Boeing. So I wanted to mention it because I know a lot of you like trading Boeing. It's just not for me. There's too many headlines in this name. So perhaps it is putting in a bottom. I thought on CNBC they made a really good point about that. Besides the 730 Max, they do have a lot of other areas of business that is doing very well, like the defense business. So this is not looking bad. I also like GD here, but they report next week, and I'm not going to put on a swing trade in front of earnings. I think also I wanted to talk a little bit about the medical device group. I think it's looking really strong. I got kind of faked out in ISRG on Friday. That's okay. And that's why you have to really be careful about what time you're adding trades. I mentioned that I would be adding to it if it showed what I wanted it to, but it did not. So it is what it is. It's an ugly looking candle. It's on volume. But it is just an inside bar. So for now, I'm just going to keep the trade that I have on. Being that it's marking down significantly, and we'll see if it could actually trigger again. If not, it will be a loser on my books. But I did want to just talk about the strength. Abbott had good earnings. DHR had good earnings, even though they got negated. I would keep an eye on this stock, and I would keep an eye on this group. EW is another name in the group that has earnings next week, but also showing, I think, if you go back to the ETF, this is what's showing relative strength. Baxter's another name that reports this week. A couple other names that caught my attention. Etsy, flirting with this downtrend line, right? This team's going to report on 8/1. I would keep an eye on it. Maybe set an alert at maybe right around 67 in Etsy. But again, as I'm going through some of these names, there's not a lot of great looking setups for this week. I don't want to completely ignore how the charts are looking on the banks, kind of an unloved group. Look at Goldman, which had good trading results. Watch 213 in Goldman. It did just barely close inside value for the year. So keep an eye on Goldman. Obviously, the one that I think is the strongest in this group is Ali, which I took profits in. For me, I'm not going to chase. I think right now, if this thing kind of comes in a little bit, puts in a bull flag, then I would kind of look to re-enter this name. But I think, again, not chasing right now in this market is very important, especially in the beginning of the day when we see strength. A couple other, I mentioned Home Depot is one of my favorite setups for the week. Humana, we talked a little bit about in the chart form webinar, I believe. This doesn't look bad. Again, it's got earnings coming up. But it interests me on the weekly chart, Humana. By the way, UNH, again, thank you value areas. This has resistance up at 272, but on the daily chart, otherwise I would have played this for earnings. So thank goodness that we have the value areas, because this tagged this value area, the version point of control, right before it reported earnings. And I do not want to initiate trades once we're right at a version point of control. A couple other semi names, right? So again, this is just where I'm showing strength. So it doesn't mean I want to put 5 positions on, but this Kemet looks pretty interesting too. It's trying to get out of this base. I like this a lot. So some type of a trend line here. I have to tighten that up a little bit. But you could see how they're drawing it in FinViz. So I think pretty interesting. I went over Lam Research. Also, IIPR is a momentum name, kind of putting in some sort of a bull flag. It's got a hold in here. Has to hold this 20-day moving average. But maybe a name to keep an eye on. And then a couple things that are pretty different. I think, with this heat, I was looking at the water ETF. Believe it or not, there is a water ETF. This does not look bad. Consolidating up here. I went through individual names in this. Nothing really jumped off the page in the water ETF, but I did spend some time. Like I said, I'm looking for something different. That ROP and Ecolab, they're not bad looking. And of course, Danaher is on there, which I just went over. Just a few other names to go over here, and then we'll call it a video. Zoetis, again, another name that's going to have earnings, so can't do much with this thing right now, but interesting chart signal. XLU, something I'm watching for next week. It did get rejected at the breakout level. Watch that 6104 in the utilities ETF. We mentioned WDC, Western Digital. Last one I think to go over is Mosaic, right? I made some money on a deer trade on Friday. A lot of the ag stocks were going pretty crazy. There is an article out this weekend about how China exporters want tariffs removed. I don't know if that's why. That's why things like lumber and soybeans and wheat went nuts on Friday. But some Chinese companies are applying for tariff exemptions as they make inquiries about buying U.S. agriculture products more than a week after Donald Trump complained about the U.S. hasn't increased purchases. So that's going on. I don't know. I'm not 100% sure if that was the catalyst for, things like lumber, soybeans, wheat, all moving up. But it could be. It could also be the weather. It could also be the hot weather. So that's another play too. Something like Mosaic could be a weather type play. So 2382 would be your top of value support. But yeah, you could look at MOO as well, which is the agriculture ETF, which also doesn't look too bad here. And that ETF covers agriculture equities. DBA is the agriculture ETF that has the actual commodity futures in it, like wheat and corn. All right, guys, so that's it for the weekend video. That's a pretty long video. I apologize for the length, but I wanted to kind of cover everything that's going on. And, me going over, I went through so many charts this weekend just to see if there's anything that is really showing some really nice relative strength, or trying to kind of find something a little bit different in this market. But I'm not seeing a ton of things. I think really you just have to be patient. If there's a little bit more, I'm actually hoping for a little bit of downside in the beginning of the week. Why? Because it kind of shakes out all the weak hands in the market, right? And shakes out that bullish sentiment. So I wouldn't mind that. And then just keep in mind, it's, for the next 2 weeks, it's going to be a difficult time to really do anything more than scalping and day trading. All right, guys. So that's it for the weekend video. If you have any questions at all, you can reach me tonight in the. You can private message me in Slack. I'll be around watching futures and such. So I'm not traveling today. All right, guys. Enjoy the rest of your weekend.